buying an annuity is important. It's a big deal. And you got to have someone in your corner who's looking out for you. Hey guys, I am John Stevenson of the Guaranteed Retirement Guy, and I've been talking to a lot of people lately who are super nervous about whether or not their annuity is protected. So is your annuity protected? Is it safe? Is it a viable company? Is it going to be around 100 years from now? And I get this question a lot. I mean, for good reason. I mean, we've had a lot of bank failures over the last 30 years, which makes people nervous. You know, I think about banks, and you give them $100, they literally are going to lend out most of it. You give them $100, they're going to keep a little $10 bill in your bank account, and they're going to lend out the rest of it and make money. Now, I was doing a little research on the reserve requirements that annuity companies are required to have. And it's interesting. There is an actual legislation that requires, it's a rule that requires the insurance company to keep all of the money in reserve that it has to provide in guarantees. So let me put that into perspective. I've got a client, he puts a $500,000 into an annuity contract, okay? That insurance company is on the hook for guaranteed income the rest of this client's life. If this client chose an income rider, which a lot of my clients do, if they pay that out for, 20, 30 years, they're going to pay out around $1.5 million in income. So you be the judge. If you're thinking about putting your money with a bank and you already know that they're going to you're going to put your money in and most of it's going to go out the back door, versus an annuity company that is required to keep that reserve because they are on the hook for those annuity payments. And for fixed annuities, MYGAs, where they have to pay you a 5 or a 6% return, they have to make sure that's in reserve. So there's a lot of safety that goes in to these contracts. And it's really important for you to know as a consumer, because this is your retirement, okay? You've been saving up your money for a long time. And, there's risk and reward for everything, right? In the stock market, we usually will put our money in the stock market so we can get some growth, so we can beat inflation, okay? So we can grow our wealth. But of course, there's risk, okay? You put your money in stocks of companies. Sometimes those companies fail. Sometimes they go bankrupt. The overall market, even the global market, crashes. And with that, so does your investment. That's just the risk-reward ratio. That's what you're signing up for. When you put your money into the stock market, you are agreeing to all the risks that come with getting a possible higher return. Now, with insurance companies, they're not promising you a 10, 12, 30% return, okay? With the fixed annuities, it's much, much lower. It's usually between 3, 4, and 6%, and it's been very, very high lately, but the past decade, it's been really, really low. I mean, those guarantees were more like 2%. Okay, they weren't trying to give you a lot, but they were also giving you a lot of guarantees because they were required by the state to keep that money in reserve. Insurance companies, they are one of the safest bets out there. Okay, that's why you have people like Warren Buffett that put their money into these companies. And that's why they invest in them, because they're so strong. Now, we can go back to, several years ago, you might remember when the government came in and they bailed out AIG, right? You remember that? When they were failing? Well, it was AIG's parent company that was failing. They were the ones, making all the bad decisions. The actual annuity carrier, they were fine. They were solvent. They had plenty of money. And the parent company was like, hey, will you please let us borrow from this solvent company? And of course, the feds were like, absolutely not. It got a lot of buzz and people were upset, but they did not realize, and I've got clients that reach out to me and say, didn't they fail? And I says, actually, no. The annuity company did not fail. It was the parent company that was having issues. Here's the thing. There's risk in everything. There's risk in being alive. There's risk in driving. You have to decide, all right, is the reward worth the risk? Of course, the higher the risk, the higher the reward. And with insurance companies, the risk is very, very low. I mean, they're investing in things like bonds, okay? Bonds are historically very, very safe. And of course, the returns are historically much lower than stocks and other more risky investments. But that's what they're for. They are there for guarantees. They're there for protection. And that's why you don't hear about these companies failing very often. And when they do fail, because every once in a while you will have an insurance carrier that will fail, usually it's because they weren't following the rules. Maybe they're a very young company. They're not well known. They just got started. But here's the thing, even with those companies, and those are not usually companies that I will recommend. I'm usually looking at A-rated companies that have been around for a long time. But in the instance where that does happen, let's say they have to go into bankruptcy protection, okay? So what happens is, or they go into receivership. So what happens is the state Guarantee Association they'll first try to assign it to another insurance company. And typically an insurance company, another stronger one, will take it because they want the assets. They want to build up their own portfolio as well, and they're willing to accept the obligations. Now, if for some reason that doesn't work, then they'll go ahead and take over, and they will give the policyholders their money, plus they will give them the minimum interest that they were going to earn. So for instance, if you purchased a MYGA and you were getting a guaranteed 5% return, and for some reason that company went bankrupt, and worse comes to worst, you're still going to get a minimum type of return. So it's important to know when you're buying an annuity who it's backed by. And so when you're looking at A-rated companies that have been around for a long time, even some B++ companies, there are some very good ones there too. They're all state insured. They're all state regulated. They all buy reinsurance from other insurance companies to give that layer of protection. There's a lot that goes into it. And if that's not enough, they're also required to have very, very high reserves, much higher than a bank has. So I just kind of wanted to reassure you, because there's a lot of uncertainty out there and people get nervous and they're wondering, I've been saving this money. It's a large chunk of money. I don't want to lose it. I want to make sure that what I'm doing is the right thing for myself. And that's why you need to have someone like me talk with you and show you what's available and explain which companies are better, versus other companies. And one thing I want to mention as far as annuities, when you're thinking about an annuity that doesn't give you that guaranteed, probably what you're thinking about is the variable side. So variable annuities, they can lose money. They can lose a lot of money because you're actually invested in the stock market in those, okay? They've got high fees. They're much more of an active investment account. They're literally tied to the stock market. You got sub accounts in variable annuities, that go up and down with the market. So if you're thinking about one of those, yes, you can definitely lose money in variable annuities. So obviously I am the guaranteed retirement guy, and I focus on guarantees. I focus on guaranteed income, guaranteed pension, a guaranteed retirement. Buying an annuity is important. It's a big deal. And you got to have someone in your corner who's looking out for you. Kind of like my book, the Guaranteed Retirement book. I highly recommend that you read it. You can get it on Amazon. Anyways, for whatever that's worth, if you've got questions, you want to chat some more, go ahead and book a call. If you got questions on the video itself, go ahead and leave a comment below. I'll do my best to answer it, and look forward to seeing you in the next video. Hey, thanks for watching today. I hope you had just as much fun watching as I did making this video, because I love to teach about annuities. But if you got a question that I haven't covered, please comment in the section below. I'd love to hear from you. Thanks. We'll see you soon.